Hi, welcome to my lesson. I'm your lecturer in Financial Accounting 1, Mr. Tan Chin Ping. You can call me Mr. Tan. And this is my email address. If you have anything related to the subject or related to the paper, you can write an email and I will try my best to answer you. So before I start the lesson, let me give you some introduction on the financial accounting. So basically, in this financial accounting 1, we cover from the very basic accounting understanding up to the preparation of account. So you no need be worried if you don't have any accounting knowledge in your secondary school, because we learn from the beginning. You will follow my step by step. We learn how to prepare a complete account. And for those who have learned your accounting in your secondary school, I also suggest that you pay attention in my lesson, because there are some difference between our diploma level as well as compared to the secondary accounting. So you can find the difference between the secondary school accounting and diploma level, and I suggest that you follow my methods in the preparation of account. So this FA1, we have 9 chapters. We start from introduction of accounting, we learn what is the double entry, and up to the preparation of the complete financial statement for a sole proprietor. So let's start. Chapter 1. So chapter 1, introduction of accounting, accounting characteristic and concepts. So upon completion of this chapter, you should be able to understand the concept of accounting. You should be able to explain and differentiate the accounting concept and their application, define accounting base and policy, and discuss the role of accounting standard. Distinguish the difference between financial accounting and management accounting. Last one, understand the form of business in private sector and its difference. So a very good question when you start learn something, what is accounting? To understand this, let me explain in a diagram. So imagine you are a boss of the company. So what kind of job you have? We assume you have a handphone shop. So we know for handphone shop, what kind of business they are doing. They are selling handphone. Not only selling handphone, sometimes you also sell handphone accessory. You may also sell top-up card for your customer, and you may help them to pay what? Handphone bill. So tell me, let's say you are doing a business, you're doing a handphone shop, and you are selling this product or you are selling this service to the customer. So tell me, assuming after a month later, how you know you are making a profit or you're making a loss in your business? How you know you're making profit or loss from 1 month later? To solve this problem, we can use accounting. Accounting is a systematic approach that can help you to summarize or gather the information in your business. So from there, you can understand whether your company is making a profit or making a loss. So let's highlight the keywords. Accounting is a systematic and comprehensive process to record and summarize the financial transaction or events of a business entity. So to provide the information about financial performance and position of a company. Financial statements are the product of accounting. It means that after you prepare the account, you can get financial statement. So this financial statement will be useful for a range of user for their decision making. So this is accounting. Gather and summarize the business transaction in order to understand whether your company is making loss or making profit. So you may ask the question, sir, let's say this is my own business. Confirm, I understand how much I earn or how much I lost in the business, right? So is accounting useful for me? Yes, accounting definitely useful for you. So let's change another example. Assuming you are the boss and you do a very good business. For example, you have 4 outlets. You have 4 outlets. Definitely you can't handle every outlet yourself, right? So what will you do? You will employ another one called manager. You will employ manager to help you to monitor the business. So one question, how you understand whether this manager is doing a good job or not? Is this manager help you earn money, or this manager is not doing well, help you lose money? How we can understand? Again, this problem we can solve by accounting. Let's come back to textbook. Why we need accounting? An owner, shareholder of a business entity may not be the one to involve in the day-to-day operation. Just like the example just now. You have many outlets and you cannot operate yourself. So in this situation, owner may appoint manager or management to operate the business and then to control over the resources of the business entity. Management is required to prepare financial statement to reflect the performance and position of the business entity. So accounting can serve as a stewardship function in this arrangement. Owner can use financial statement prepared by the management to evaluate the performance of the manager. For certain entities such as private limited company and public listed company, financial statement is required to audit. So we back to the diagram. In order to know that your manager is doing a good job, it means that help you earn money or not help you earn money. We use accounting to evaluate their performance. So accounting is very useful when your business is getting bigger. And for some entity, for example in Malaysia, Sendirian Berhad we call private limited company in English, and listed company, the financial statement is required to audit. What is the meaning of audit? Audit means auditor, a professional person will help to examine the accounting information to ensure that the financial statement is free from material misstatement. It means that the account is appropriate. Next, we are going to learn what are the potential users of accounting information. The first one that requires financial statement is shareholder. So why shareholder need the financial statement? Because they can evaluate the financial performance of the business entity and the performance of manager. Next, management. Management is the one who operate the business. For manager, why they need the financial statement? Because they can use the financial statement for business strategy planning and evaluation of strategy. Next, bank, lender and supplier. Why bank need your financial statement? Because they need to ensure or they need to assess your credit worthiness, and they also need to assess your ability in the repayment of term loan. What is the meaning of credit worthiness? Your payment behavior, whether you are a trustable person, whether you can pay the money or not. So we use credit worthiness to assess whether a person can make repayment or not. Next, investor. Investor to evaluate financial performance of business entity in order to facilitate investment decision making. Here have some difference between investor and shareholder. Investor is the one who planning to invest in a company. They are not yet the owner, not yet the boss. But shareholder is different. Shareholder is the boss of the company. But investor, not yet the boss of a company, because you are the one who planning to invest. Of course, for an investor, you need the financial statement for the company in order to decide whether you want to invest or not. Imagine you have a friend, your friend have a business, ask you to be the investor. The first thing you ask is what? Definitely you will ask him or her to provide you the financial statement, because you need to understand whether the company is in profit making or making loss before you make the decision, right? So investor also need the financial statement to facilitate their investment decision. Next, government. Why government need the financial statement? Because government need the financial statement to determine the income tax payable by the government. By the company. Next, employee. For job security, if you are the employee of the company, you will definitely worry that whether your company is able to make salary payment to you. So if you can have a chance to review the financial statement, of course this will give you some security whether the company has the ability to make payment or not. Last one, customer. So customer sometimes need your financial statement because they will want to ensure you are stable. When you are stable, they can make sure that the goods supplied by you is also stable. So that's all for the part 1 in the chapter 1. So if you have any question, you can ask me in LMS or you can ask me in the comment function there, and we will continue part 2 later. Thank you.